Hello everyone, welcome to this particular masterclass. I am Sharan, I'm a trader by profession. The first thing that a person needs to learn when he wants to learn trading is Japanese candlesticks. I am trying to make an entire masterclass on Japanese candlesticks in 4 different parts. The first part and the second part will be basics. So this is the first part of the video where we are going to talk about different types of candles, how to interpret them and things like that. In the coming series, we are going to learn in depth understanding the psychology of each of these candles, right? I'm sure you will enjoy this entire journey. I have made the first part. Please like, share and comment amongst your friends and family, whoever is interested to learn. This is for absolute beginners and even people who are already in the market. You can just go through it at a 1.5 speed. It'll just rebrush your entire concepts. All right, see you on the other side and please do like, share. Hello and welcome to this session. In this session, we are going to look at what are price charts. I'm sure you would have heard a lot of traders talking about different kinds of charts. I wouldn't complain that because every trader would have his own favorite kind of a chart. Now, before we go there, I would like to tell you what is a price chart. In simple words, an asset which has been recorded its price against a specified time. Now, for example, let's assume the markets open at 10 o'clock. The price moves from 100 and reaches at 140 by the end of the day. This momentum captured by different kinds of chart is called as a price chart. I'm going to take a very simple example. Let's say the price opened at 100 rupees here. The price moves between 120, 115 and so on and on. By the end of the day, it closes at 140. This pictorial representation of the movement of this particular stock is called as line chart. Now, by just looking at the line chart, we could say that the price is moving in an upward direction starting from 100 and closing at 140, right? With this simple way, we would also look at different kind of charts which would give us different meanings. Say for example, a Japanese candlestick would give us in-depth analysis and decision making abilities to take in the market, right? Having said that, we are going to delve in depth about Japanese candlesticks in the coming session. Now let's get straight away into action. All right. So now we are going to do one thing. We are going to look at different types of charts available, right? First of all, we'll look into what is called as a line chart. Now, say for example, we are looking at a stock called as Nifty on a daily time basis. Now, this is representing the line chart of the candle, of the stock. Now, basically, this line means that the price was at 15,000. The prices are on the right side, right? So the price started moving between 15,849, went up, came a little down, went up to 17,800, came down to 17,500, touched 18,500, again came down. So this particular line is representing the momentum of a particular asset. The asset could be stocks, it could be cryptocurrencies, it could be many more things. All right. So this is a line chart. Now, apart from line chart, you have something called as a Heikin-Ashi charts. Now, what are Heikin-Ashi charts? They also represent the same concept, right? Which is the price momentum of a particular asset along with the price, right? With the time, I'm so sorry, with the time. So this at this particular time on 4th August 9:15, the price was around 15,849 and so on and on. 25th October 21, the price was 18,400 or 18,500. These are the representations. Similarly, you have something like a what is called as a bar charts. These are called as bar charts. Now, as I told you, every trader will have his own way of looking at the charts and comfortable with whatever he is, acquainted knowledge with, right? So for me, a Japanese candlestick gives a lot of confidence because I have learned and understood, and all the things that I have learned, I will be explaining you in the coming time as well, right? So this is a bar chart. Similarly, if you go and look at something called as a these are all kinds of charts available: bars, candles, hollows, column, line, area, so on and on. My favorite being the candlestick charts. Now this also represents the same thing, the price momentum, but along with this, a candle will give more characteristics to the prices. It helps us to understand where to buy, when to buy, who's buying, whether there is a confusion in the market, whether there is interest, there is demand, there is supply, and so on, right? That is the reason we are going to use mainly Japanese candlesticks. I hope these are called as, each of these candlestick represents a particular day. Now if I put it in 60 minutes, sorry, right? So each candle represents 1 hour time frame. So that particular time at 9:15 to 10:15, this was formed. Now that would also give us a information. All right. Now as we go ahead, we'll look into these particular things in depth. All right. So let's go straight into learning candlesticks. In this session, we are going to look at what is a Japanese candlesticks, or simply called candlesticks. A candlestick or a Japanese candlestick is a method of price chart which is used by a lot of traders across the globe. Believe me, a lot of traders who use this make a good amount of money in the market. Now, this method was first used by a rice trader in Japan around 400 years back. I'm sure traders, you would have come across certain pictorial representation which looks like exactly like this. Believe me, each of this would have a different meaning, its own significance. As we delve deep into understanding the candlesticks in the coming sessions, you will definitely learn about these things. Now, before we go there, I would more like to tell you what are candlesticks used for. First of all, a candlestick is used to understand the price momentum of a particular asset, right? Secondly, we would like to understand where the demand for a particular stock would come at, or where does a trader would like to buy or add to his positions. We would also understand the supply. Supply basically means that there are no buyers in the market, right? And there is absolutely no demand for the particular product. So the price or the asset of that particular product goes down. This we help this helps us to understand the supply in the market. I'm sure you would be keen to know what is confusion. Believe me, most of the times in a particular stock market, the prices doesn't move in either direction. They are stagnant. This kind of a range momentum is basically represented by certain candlesticks, which helps us to understand this confusion in the market. And most importantly, it also helps us to understand the interest amongst the buyers. A green candle would tell us that there are buyers who are interested in the market. Similarly, a red candle would help us to understand the supply in the market or sellers in the market. In this way, we are going to learn a lot about candlesticks. Without a further ado, I would like to welcome you to the next session where we start understanding how to build a candlestick and what are its significance and how do we interpret each of them. Hello and welcome traders. In this particular session, we are going to learn about candlesticks. We are going to see how to build a candlestick, how do we interpret each of them. Without a further ado, let's straight away get into it. Now, before I go there and teach you how to build a candlestick, I would like to take you to one of these days, random days in the stock market. Let's assume there is a company called as Google or a Facebook or any of these companies share which opens at 100 rupees or 100 points, right? Now, assuming that it has opened at 100 through the day, we want to see how does the price perform. Let's assume for a second that the price started moving in a multi-directional movement or a zigzag movement and finally closed at this point of level. I'm going to put certain numbers to these things. So let's assume this is 70 points. This is 150 points. And finally, we have something which is at 130 points, right? So these are the four important data points through which a particular company would have traded on a given day. Now, how do we build a candlestick based on this? There are two important rules. Please state there are two important rules to drawing a candlestick. The first rule states that the open or the close have to be used through or joined through a body. Now, before I go there, let's also call these important data points with certain names. See, I'm going to call this as O. I'm going to call this as L. I'm going to call this as H. And finally, I'm going to call this as C. Now, why did I call that? Look at this. The price opened here. So I'm going to call it as open price. The price went all the way till 70 points. So I'm going to call this as low. The lowest point at which the price or the stock has traded. Finally, I'm going to call this as H, which basically means the highest point through the day where the stock has traded. And finally, this I'm going to call it as C, or the close price, which is at 130 because the market ended at this level. Right? So we have four important data points, O, H, L, C. Now, if you look at the right side of the presentation, I have mentioned how to build a candlestick. We need four important data points: open, high, low, and close. So we have been able to draw all the four. The next rule states, or the first rule of candlestick states, that the open and close price has to be joined with the help of a body. Now I'm going to call this as open and this as close. So with the help of a body, I'm going to mark these two important levels, right? And the second rule states that the price of high and low have to be used or joined with the help of a wick. I'm going to call this as a wick. Now, if you see here, this somewhat looks like a candlestick that we had drawn earlier. My dear friend, we have successfully been able to draw a candlestick, right? So the first rule, very simple: the open and close price of any given asset needs to be formed with the help of a body. This is body, and the high and low of the day have to be marked with the help of a wick. With this, we have been able to draw a candlestick. Believe me, each will have its own significance. Now, when I call this as a body, it has certain importance, which we are going to look in the coming sessions. So I'm going to name it as body, BODY, and this as WICK. Now, this is a 1 day time frame that we have been able to do. Similarly, if I want to draw a candlestick for say 1 hour time period, how would I do that? I would consider the same four important data points of that particular hour, right? And use the same method of drawing open and close with the help of a body, and high and low of the day with the help of a wick. This concludes our first chapter on how to build a candlestick. In the coming session, we are going to see the different types of candlestick and its importance. Hi everyone, welcome back to the session. Now from here onwards, we are going to learn about different types of candlesticks. The first candlestick that we are going to learn is called as a Bullish Marabazo, one of the most prominent candlesticks that you can come across. Now, why is this? As we learn, you will be able to recognize and its importance. Now, having said that, I'll straight away get into one random day where the price opens at 100, and we will see that the price has been constantly going upside, right? And finally, the price closes at the highest point of the day, which is at 180. So we have open and close for the day. Let's assume the low and the high of the day also are at the same level. Now, what does the rule state? The rule states the opening price and the closing price have to be formed with the help of a body. This forms our body. Now, this kind of a candle is called as a Marabazu candle, where the open price is the lowest and the close price is at the highest. Yes, I do agree. At certain point, you will have small deviation, which is okay, right? The most important thing in a bullish Marabazo is that we need to have a good range candle or a good body for a particular candle. The candle body indicates the strength. The body of a candle indicates the strength of the buyers or the participants in the market. So here, if you see, this is a green strength, right? So this is a bullish Marabazu. Now, the most important interpretations about this candlestick is that there are buyers conviction. Now let's assume when you go to a particular shop, right, and the price is at 5,000, 6,000, you want to buy that, or you buy that is because you feel there is a value to it, right? There is a conviction amongst you to buy that particular product, that you will get a value out of it. The same thing happens in the market as well. People are ready to buy these stocks because they feel there is a value to it. Now take examples of Asian Paints in India, Apple or Google or Tesla in US, or any of these markets. These are companies where the prices are going higher and higher because there is a value attached to it and the buyer's conviction towards this particular value proposition. Now, the second important interpretation regarding a candlestick, Marabazu, is that it helps us to understand that demand in the market. Only when there is demand, the prices will go upside. Always remember, when there is demand, prices go up. When there is no demand, the prices shoots down, right? So a bullish Marabazu would help us to understand that. Third, will also tells us that there is a trend continuation. Now, what do I mean by trend continuation? That the price was likely to go up or was going up, and then you have a kind of a Marabazu indicating that the price will further continue going upside. This shows a trend continuation in the candle. So these are the most important thing. How do you trade a candle? We will look into it in the coming classes, but for us right now we will only concentrate on understanding the logic of these candles. Now after this video, I'm also going to add a small video clip which I'm going to give you live examples in the market. I'm going to give 5 examples for each topic that I cover, along with a small replay button, right? I'm going to have a replay button so that it shows you how the price or the market behaves once these candles are formed, right? So please do check out those videos. Do not skip those videos. Please have a thorough look at it, and please do feel to comment, and you can also question there itself. I'll be very happy to answer them as well. Now, in this particular kind of session for the next 2-3 minutes, we are going to see live examples or of different types of Marabazu candles on different time frames. All right. Now, for example, this is on a 24 hours, which is nothing but a 1-day time frame. Here, I'm going to mark this is called as a green Marabazu or bullish Marabazu. Why? Because if you see here, the price opens at the low point of the day, very small wick, minute wick, and through the day picks up and closes at the highest point of the day, where even the highest point is very narrow, with a very small difference between the closing price. So this becomes a green Marabazu candle. All right, now we are going to see some more examples in a different time frame as well. Here also, if you want, I can just give you one more example. This particular candle I'm talking about, this is a Marabazu candle. It indicates there were buyers interested in the market. The price opened here at 17,319 and finally closed at 17,464 through the day with a very small minute. This as well can be called as a Marabazu candle. All right. So these are our daily time frames. Now we can also have something in a shorter time frame as well. Right. We'll see some examples over there. Let's take in 60 minutes. Right. Now we are looking in 60 minutes. Look at this particular candle right in front of me. This becomes a green Marabazu candle or a bullish Marabazu candle, right? This particular one are called as green Marabazu candle because the price is able to go through the day, right? Here also we have one, right? This is a green this particular one, right? I'm talking about this one where the price opens and closes at the day highs, right? So here also, if there is a green good range, but if there is a very big wick, we usually don't consider it as a Marabazu. We just call it as a range candle, and we don't call it as a green Marabazu or bullish candle, green bullish candle. Here also we have one example. This particular thing is also called as a green Marabazu candle. All right. So we'll also have a look in 15 minutes and then 1 minute time frame as well, right? Now here in front of me also, if you can see, this particular candle, right? The green candle is called as a green Marabazu, right? Indicating there is a lot of buying activity at that point of time, right? Here also we have one. These are your green Marabazu candle. This is a green Marabazu candle, right? This is a green Marabazu candle, right? This one as well, right? So these are all in 15 minutes time frame. Now we'll also have a look in 1 minute also. Even if in 1 minute you will find that there is a green Marabazu candle indicating there is a strength of buyers, right? These examples 1 2 3, this one, right? These are a green Marabazu candle indicating there is a good amount of strength in the market, right? Here is a green Marabazu candle, here is a green Marabazu candle. So even 1 minute, 5 minutes, 10 minutes, 15 minutes, 20 minutes, 1 hour, all will have a respective candle. Okay, they are all called as the same thing, but how do you interpret them? Do you take a trade just based on 1 minute, 5 minutes and all that? We will go ahead and see. As of now, we just stick to observing and understanding the candlesticks, right? So this is a part of a green Marabazu candle. I hope you're clear. Now we'll go into the next part, which is a red Marabazu or a bearish Marabazu candle, right? Hello traders, welcome back to the session. Now, I hope you remember our bullish Marabazu candle. Similarly, we are going to learn something called as a bearish Marabazu candle. Now, let's straight away get into the drawing. Let's assume that the price opens here at its open price, which is say 100, right? And as soon as the price opens, the stock or the asset keeps moving down or starts moving downside, right? So this open is also the high of the day. I'm going to call it as H. Similarly, the price closes at this point. I'm going to call it as C. At the same time, it is also at the lowest point of the day. Now, as per our rules, it states the open and closing price has to be formed with the help of a body. If in case the price goes slightly lower or slightly higher, we can have a small wick, that's okay. But for us, a Marabazu basically means the body. For us, the body is very important. Now, whenever you have a candle which has a very huge body compared to it wicks, this forms as a Marabazu, right? Now, if it is a open is equal to high, that means it is a bearish Marabazu. Open is equal to low is a bullish Marabazu. Now, what does it indicate? First of all, it indicates there is seller's conviction. Seller's conviction means that there is no demand in the market, and that is why there is a supply. Since there is a supply, sellers are more aggressive in this case, right? So whenever you look at a particular Marabazu and especially a red Marabazu, you need to ensure that you have a proper stop losses or exit strategy, because the prices are likely to go downside. Continuing with the same point, I would like to make that a red Marabazu or a bearish Marabazu also indicates a trend continuation. What I mean by this is, if suppose the price was going downside and then you have a red Marabazu, it indicates that the prices might further fall down or further might dip. This is an important point in terms of Marabazu. So a red Marabazu or a bearish Marabazu indicates negativity in the market. Now, how do we take a decision based on this? We will see in the coming videos. As of now, we'll only identify. Please have a look at the examples. I'm going to give you 5 examples. At the same time, I'll also replay certain clips so that you get used to it and you know how the markets behave when you have these red Marabazu candles. All right, I hope to see you on the other side. Let's see on the other side. Thank you. All right, now we are going to look into what is called as a bearish Marabazu. We have explained, we have seen the theory part of it. We'll look into practicals. Now, in a time frame, 1 day time frame, we are looking at, look at this particular candle, right? Where the prices opens at the top of the candle, top of the day, or at the initial point of the day, and closes at the lowest point of the day, right? With very, very small or minute wick on either side, which is called as a Marabazu candle. Now, this is a red Marabazu candle, which means bearish Marabazu. There is a negative sentiment in the market, right? Now here also you look at this particular candle with absolutely no wicks at all, right? This becomes a negative, Marabazu candle. Here also you see a lot of them are negative Marabazu candles, right? These they do not have wicks on either side, and there is a good range body backing it up. So this becomes a negative sentiment in the market. All right, I hope this is clear. Now we'll also look into shorter time frame, say 60 minutes. We'll go into 60 minutes and check, right? There is the right one in front of me, which is here, this particular thing, right? One second. Yeah, this one. This is a red Marabazu candle with absolutely no wicks on either side, with or very small wicks, right? And a good range body topping it up. This becomes a Marabazu candle. Now look at these candles here. A good through the day, right? You have 1 2 3 4, right? Very minute kind of a wicks on either side, but a good range body, right? So this forms a negative sentiment in the market. Here also we have one example, right? So like this, you have to look at different types of Marabazu candles at different time frames, right? Here also we have plenty of them, right? I can just keep on showing you more and more and more and more. How do we interpret this? As we go ahead, we'll see, right? As of now, our job is just to identify them, right? So we'll go into 15 minutes time frame. I'll show you even in 15 minutes time frame. Look at this candle, first candle itself, right? Sorry, this is the first candle, which is a 15 minutes candle with no volumes or no wicks on either side, or very minute wicks. Here also you see this is a, which is indicating the proper bearishness in the market, right? These are also one of those, right? Look at it, absolutely no wicks on either side, very minute, or absolutely no wicks, indicating a bearish sentiment in the market. We'll also have a look at some more here. Look at this candle, the first candle, I believe. Yes, this is a 915 candle, which indicates absolutely no wicks, indicate bearishness. This also similarly. Now if there is a small no wick but small thing, we will just call it as a range. We want something which is has a good sized body along with wicks, absolutely no wicks, or very minute wicks on either side. All right, we'll take into 5 minutes, or say straight away we'll go into 1 minute time frame, right? Even in 1 minute you will find a lot of them. Look at this, right? Clearly indicating negative sentiment, right? This one, this one, this one, right? This one, indicating there is negative sentiment in the market, right? Look at this particular candle, absolutely negative in the market, purely going downside, right? With absolutely no wicks on either side, right? Here also, how do we interpret? As I told you, we will see ahead, right? As of now, just to identify, please go and identify as many Marabazu candles, green, red, you can, and then we will take it forward from there. All right, these are the 3 Marabazu candles indicating negative sentiment in the market. All right, clear? Is there any doubt, any questions? You can please put it on the comment section as well, and do share this particular video with all your friends and family members, and whoever is intending to learn. This is absolutely free of cost, and it is, I think, more than enough to start off with. So you can please do forward this to your friends as well. All right, thank you so much. We'll continue later. Hello traders, welcome back to the session. Now we are going to look at something called as spinning top, which is a very interesting candlestick. Unlike your Marabazu candles, where the price determines it wants to go higher or lower, in spinning tops we do not have the same case. Like as usual, which I do, we will go into a typical spinning top day and try and see how the prices would have reacted. Let's straight away start into action. Say for example, the price opens here. I'm going to change the color. 1 second. I'm going to make it as white. Yeah, right. Where the price opens here, and as there is no demand, the price starts to further decline. At this point, there is seems to be a lot of demand amongst buyers, thus the price starts going higher, right? At one point again, there is no more interest amongst the buyers, the price comes down as the supply kicks into the market and finally closes at this level. Now we have two important data points, open and close, high and low, right? As usually what you'll do is the open and close prices, we are going to use a body, the high and low of the day, we are going to mark it with the wick. Now this kind of a candle is called as a spinning top, where you have a small real body and wicks on either side. Please state that I have used white color only because in spinning tops you don't need to see the color. The color doesn't matter. The only thing that matters is the size of the wicks have to be equal on either side, and this has to be a small real body. You cannot have a big large body. It has to be a small decent sized body with wicks on either side. This is called as spinning top. Now, let us try and understand or interpret what are its consequences. How do we take a trade? Now, first of all, as I mentioned earlier, there is no conviction, right? There is no conviction in terms of buyers or sellers. Now, look at this price. The price opened here. There was no demand. The price started going down. All of a sudden, there was a buyer's demand coming into action and it took the prices higher. And finally, again, there is no conviction to take the prices further higher, right? So it comes down. So this is the reason why we say there is no conviction amongst buyers or sellers. This is the first one. Secondly, there is, as I mentioned, it is a confusion. There is a confusion amongst buyers or sellers. Unlike a Marabazu, when we know that there is a clarity in the thought process, there is no clarity as such when it comes to spinning top. The third and the most important thing you need to understand is that a spinning top can be a reversal signal. Now, what I mean by reversal signal, if suppose the price is on an uptrend is going higher and higher, and then you have a spinning top created here, the price might reverse and come downside. Why? Because there is a confusion created that buyers are not showing more interest, so the sellers kicks into the market and the prices comes down. It can happen the other way around as well. The prices are going downside, you have a spinning top, and then there is a confusion created that further price may not fall, and eventually the demand kicks in and the price might go upside. So these are called as reversal, right? This is the most important thing a spinning top can be used. Not necessarily, but it might happen. Now, the next important thing is that it is a continuation pattern. What I mean by continuation means that if suppose the price is going on a higher side, which is an uptrend, now you have a spinning top, right? Whenever there is a spinning top, there is a confusion. So the price might just hover around this level for certain point and then finally will again kick back into its original state. So that is why we say it might be a continuation candle where there is a kind of accumulation happening at this level. Same thing can be on the downside as well. The price is going downside, you might have a spinning top followed by some confusion in the market and finally the price going down. So this can act as a reversal or continuation pattern. So please remember, whenever spinning top happens, there is no conviction, there is absolutely confusion in the market. Prices might reverse or there might be a continuation in the game. Please have a look at the example video that I'm going to put after this. I will try and give you all the set of examples as possible, which is reversal and continuation, so that it becomes easy for you, right? All right, in this particular section, we are going to look for spinning tops, okay, examples of spinning tops. The first simple rule is color doesn't matter. Second important rule is that the wicks on either side, all right, have to be equal. For example, let us look at this. These are called as spinning tops. How do you use them? How do you trade them? We will see in the coming masterclass sections, right? This is called as a spinning top, where there is equal length of wicks on either side, right? You cannot have something like this. This is not called as a spinning top, right? Even though the equal size of wicks is there on either side, but it's not a spinning top. It has to have a real body, small real body, and equal wicks on either side. All right, now look at this particular thing here, right? These are particularly called as spinning tops, right? Here also we have one. Here also we have one, right? Now, how do you use them? Right, as we already mentioned, they can be either a continuation for the prices, or it can reverse it, right? It can either do both of them, right? So we'll see examples, one or two examples, and then we'll straight away. Now here you see the prices are going upside, right? So here there is a spinning top, this part of it, right? And then there is a price reversal, right? So you can have either side. So the other one also is that the price are moving in a direction, upside direction. Now here you see there is a breakout, right? This is a breakout, right? The price goes upside, and here you will find a couple of spinning tops, right? So there is a accumulation, and then there is a momentum again, right? So spinning tops are either can reverse the trend or it can continue the trend. Now we will see in 60 minutes time frame as well a few examples, right? I'll just delete these, right? Sorry. Now here if you see this particular thing, the first thing, this is a spinning top, right? Here also we have, so it can form in any time frame, but the idea will be same. It will either reverse or it will continue the trend. So whichever side the prices move, you have to take a trend decision. Here also if you see price going up, right? It was going up, a kind of a spinning top is there in that particular itself, accumulation hua, and then it started moving on top side. Here also when it came down, right, you had a spinning top here, right? Followed by here, look at this, the price comes here, spinning top formation, wait for some time and then starts moving. So it can act in both the ways. We'll see in 15 minutes as well, and we'll not go below 15 minutes, but we'll just stick with 15 minutes last, right? Here also if you see prices goes up, यहाँ पर आपको एक confusion मिला, right? Look at this, equal size wick on either side, and then the price reversed. When the price was falling as well, right? When the price was falling as well, there is a spinning top which says there is a confusion, right? This particular thing, there is a confusion, halt, fall. Again, confusion, halt, fall, right? So it can again reverse or it can do either side. Here also look at it. King comes down, यहाँ पर, sorry, look at this particular candle, a spinning top, and then reverses, right? So you can have either side of it. All right, so this is about spinning top. Now let's continue with the other candles. In this video, we are going to learn something called as Doji candles. Now, before I get into the nitty-gritties of Doji, what it does, how many Dojis are there, and so on and on, I would like to tell you a story, as we always do. Let's assume a person X starts selling a particular product, and since there is demand, the price starts moving upside. Now, why does it move upside? Because people are ready to buy at a higher price. As person X increases the price, people still want to buy the product. Now, let's assume it reaches a level Y, right? And further, there is no buyers in the market, or there is no demand for that particular product beyond that level. So what happens? The price starts moving down. The seller starts selling at a discounted price, and thus the price starts moving on a lower side. Now, through the day, and finally the price comes and halts here. So for us, this is O, this is high, this is H, that is high, L is low, and finally close here. Now, if you see, as per our rule, the opening and closing price are almost at the same level, right? You can call it a same or very tiny difference between the opening and closing. So any candle which has an opening and closing very minute difference or at the same level, it is called as a Doji candle, right? It would look something like this. Now, there are three types of Doji candles. One is gravestone doji, long length doji, and dragonfly dojis. Now, all have some similar meaning. Their specifications are slightly different, but they give us the same sense of content, right? Now, I also would like to tell you one more thing. Now, whenever you find a doji, right, we call it as a neutral candle. Now, why do we call this as a neutral candle? Let's assume the price is moving on a higher side, and then you have a doji, right? Whenever a doji is formed, the market is in a confused state, or it is not in a clear sort of direction, right? So there is a chance, very high chance, that the price may reverse from there or move sideways, and after that there is either a breakout or a breakdown from that particular level, right? This is the reason we call doji as a neutral candle, because we are not sure whether the price will move higher or lower from that particular level, right? Now I'm going to give you a pictorial representation of the same. I'm going to just put all the types of dojis in one set and give the pictorial representation. All right, so let's go there. All right, now here if you see, the price is moving in an upward direction, right? It is in an upward direction. Finally you find a particular doji. Now these are called as long leg dojis, dragonfly dojis, and so on, but we'll just call it as simple dojis, right? Because all of them have the same opening and closing prices, right? So whenever a doji is formed, the price tends to move in a sideways direction or probably go up either side, right? So we call it as a neutral candle. In this particular representation, what we saw is that the price starts moving on a downside. That means the trend has reversed. So always remember, the doji, whenever they form, they either continue the trend upside or downside, whichever side the price is moving, or it reverses, right? So the price may also move for a certain point of time in a sideways manner, right? So you have three different possibilities when a doji is formed. So never ever take a trade when a doji is formed. Wait for the confirmation which side the price moves, either on the upside or from the downside, and then get into the trade. So I'm also going to give you 5 different examples in the next video, so please have a look at that. We'll see you on the other side. Thank you. Right. In this particular section, we are going to look at what are dojis, examples. Now here are some of the examples. It can be in 3 different forms. Long leg, there are different names to it. We'll not confuse with that. We'll just call it as doji. A doji is a one candle where the body has no significance. There is unequal sized wicks available, but the body is merely very small. All right. For example, we are taking this first, which is there in front of me. This is in a daily time frame. All right. So here there is an example, right? Let's look at this one, right? So here we have one more example. Sorry. All right. So there is an example here, right? So this is an thing. We'll see for more examples, right? Here we have one which is here, right? So what does a doji mean? It means that people are very confused, right? It is as equivalent to a spinning top, even more confusing than a spinning top, because there is absolutely no strength of buyers or sellers in the market, right? It can be reversal or it can be continuation. Now here we see here the price goes all the way, and then there is a lot of these dojis being formed. The price tends to come downside. All right, so there can be a reversal as well, there can be a continuation as well, right? Now here the price was coming down. Here if you see this particular section, sorry, right, the price was coming down. Here you have one doji which is formed, the price further falls down, right? Here also when the price was going up, there is a kind of a doji sideways and then again moves downside, right? So there can be a continuation or a reversal pattern, right? So we'll see in different time frame. We'll look in 60 minutes time frame, but the significance will remain the same. Here also, if you right now in front of me, you see this, the price goes up, there is a completely a confusion, then again tends to continue for some time and then moves up, right? So you will have the same kind of thing. All right, here also if the price was going up, here there was a doji, right, formation of a doji, and then finally there was a reversal downside, right? So you can have either of it, right? Here also if you see this part, right, a small real body, and then it stayed there in that particular region for some time and then moved outside, right? You can have two of these things, right? Here also we have price comes down, doji formation, reverses and tries to go upside, right? So these are examples of here. Now look at this, price goes up, continuation here, kind of a doji, price goes up and then finally reverses, right? So there can be either of it happening, right? We'll see a few examples in 15 minutes as well, all right? Yeah, sorry. Right, these are in 15 minutes as well. If you see, a lot of times the price comes here downside doji formation and then moves up, right? So there can be either side. The price comes down, right? Doji formation holds on for a while and then further falls. Again a doji, then again falls. So this can happen either side, right? I hope these are clear. Examples are also clear. This is also a kind of a doji. Now look at this. This goes here, a kind of a shooting star doji, whatever you want to call it as, no real body, and then there is a price fall down. So there is a reversal happening this side, right? So either side it can work. All right. Chalo. This takes care of our doji. If you have any doubts, you can just put in the comments. You want more examples, let me know. I will be more than happy to do that as well. All right. Here also last one example. We go here, price goes here, there is a doji formation and then there is a sideways and downside, right? So it reverses or continues a particular trend, usually found after a momentum, right? So whenever there is a particularly for example like this, the price moves, then there is a doji or a spinning top, confusion gets over, moves either side, as simple as that. All right, take care. We'll see for the next example. Hi everyone, welcome back to the session. Now in this particular video we are going to learn what is called as a reversal candle. Now as learned earlier, reversals candles helps us to understand where the prices will reverse the trend. For example, if the price is going down, which candles would indicate it would go upside, and similarly the vice versa. Now, as mentioned earlier, there are different types of reversal candles. Amongst them, hammer is supposed to be one of the most prominent kind of candlesticks. Now, what does a hammer do? A hammer basically originates when the price is in a downtrend, right? Now, I hope you all remember what is a downtrend. Once this particular price is in a downtrend, then a kind of a hammer is formed, which looks like this, right? Whenever such kind of a pattern or such kind of a candlestick occurs, there is a high chance that the price will reverse from here and move in a opposite direction. Now, I want to give you a understanding of this particular candle. Okay, let's understand the story behind this candle before anything else. Let's assume this is a particular person who is selling XYZ product in a market, right? This is person X. Now he is not getting customers because there is no demand, so he is reducing the prices. The price keeps on reducing at a certain level. When it reaches this particular level, say example A, level A, right, a lot of people in the market would find that, oh, this is a very good stock to own, and they start accumulating this stock in a very fast manner. Now what does it happen when people accumulate? The price starts moving in the opposite direction, right? Because people are ready to pay the higher value for the product. Now as you tend to go through the day, the prices tends to come and stop here, or probably a little higher than the opening price, right? Now if you see here, this forms our candle's body, right, which looks like this, and finally the low of the day and high of the day is originated by a wick, right? This somehow looks like this particular candle, right? This is the story behind a hammer when there is a huge amount of buying pressure coming into the market. So what does a hammer indicate? Hammer indicates most importantly change in trend. Probably it is not necessarily it has to go up, but at least it may not fall further from there. That is what it would mean, right? Now it also shows buyers demand. Now try to understand this fact कि यहाँ let's say that the price which was in a complete downtrend, right, if it had to all of a sudden move on the opposite direction, there had to be demand, right? Whenever there is a demand, the prices tends to go up, so the buyers are ready to pay higher prices, and that is why you will see that the price has closed in this fashion, right? How do you trade this? You trade above this particular candle. Now As we go ahead, I'll also show you an example, and then we will give you in 5 different time frames different examples. All right. Now, other thing than this, there is something very important. First of all, the candle, whenever it is formed, it has to form after a steep downtrend, right? It cannot happen that the price is going up and then there is a particular thing. This is not called as a hammer, right? So rule number one for hammer to form, the price has to be in a downtrend followed by a candle which has a wick, that is nothing but the tail of the body, tail of the candle has to be minimum 1.5 to 2x of the size of this particular body, right? This can be of any color, doesn't matter whether it is red or green, doesn't matter, as long as it is occurring after a fall down and has a good sized wick, which is at least 2 times the size of the body. All right. Now here is a pictorial representation of a hammer. Now, as we mentioned that the price has to be in a downtrend, right? So here you see there are good red candles, which indicates there is a selling pressure. Now, as the price moves downward, and then on this particular day, the price opens at this particular level, say 100. This is our example, 100, and the price tends to move till say about 60. Right now, once the price starts touches this level, there is a huge demand, and then the price starts moving on a higher side and finally closes at this level. Right now, whenever this happens, that indicates there is a demand amongst the buyers, right? A lot of buyers are getting into the market. Now, how do you trade it? You trade it by buying the stock above this particular level, right? So once you see that a hammer is occurred, we enter above the head of the candle. The prices tends to go on a upward direction. All right. This kind of a candle formation is called as hammer candle, right? Now, I'm also going to give you examples in 5 different time frames. So please have a look at the next video. See you on the other side. Thank you. All right. Now we are looking at examples of hammers. Hammer rules very simple. Price has to be in a downtrend, right? And then there has to be a formation of hammer, followed by which the price tends to go upside. Here is an example of a hammer, right? So here also small, you can have a small variation as well, right? Look at this, the price comes down, right? There is a hammer. Above that is where the price tends to go upside, right? These are called as hammers. Now we'll also look into smaller time frame and see if we can get a few hammers. There will be a lot of times hammers happen, especially index trading jo karte hai, whoever is into index trading, you will find a lot of hammers formation happening in the market, especially in bank nifty, right? Here we have one, the price comes down, there is a kind of a hammer, the price tends to go up, right? Here also, when the price comes down, here there is a hammer, price tends to go upside, right? You will not find that immediately that the price will reverse. It's nothing like that. There will be a pressure being built by a hammer. So hammer what happens is that this is the hammer. These are the people who are interested in the market. So right, the price tends to hold this level, right? Most of the times it just immediately leaves the zone, but otherwise also, if you see, it tends to hold this level. If it is not holding this level, that means it is not, right? It's not a hammer, or the buyers in the market are not existing anymore. So you have to avoid it. But otherwise, it usually means that. Now look at this. There is a proper fall in the market. You have a hammer, this creation, and then the price tends to move up from that side, right? So these are called as hammers, right? We'll take one more example and we'll see in something else. Say Asian pins. Right? Any stock will randomly, we'll just pick up any stock, and we're looking in 15 minutes also we will look at. So there has to be a fall followed by, there is a fall, kind of a hammer here, this part, right? And then the price tends to go upside. These are called as hammers, right? Now we'll see if there is any more. We'll see in different time frames. right? So we'll also look in 15 minutes time frame now. I hope this is clear. 15 minutes also we will see if we can find any hammers around, right? I'm trying to find the latest one so that it will, rather than going and searching for the previous ones, it makes sense if I show you the latest ones, right? Here price comes down, hammer, above the hammer the price goes up, comes down, kind of a hammer formation, the price tends to go up, right? So even in 15 minutes or whatever time frame you look at, it really works out very well, right? Here look at this. And in the coming sessions in Masterclass 2, 3, we will see the importance of it. We will try and understand which hammers to take, which hammers to avoid. All that we will do. Alright. Now goes from here. The price falls, hammer goes up. Right. So hammers are very important in terms of trading. Right. A lot of traders use this. Price comes down, hammer formation upside, the price tends to go up. Correct. So this is called as a hammer. Clear? Alright, I hope this is clear. We will stop this here and we will go into the next part of it. Alright, just one example which I can see. Price comes down here, right? Yeah, kind of a hammer, not a proper hammer, but kind of a hammer, and then you have the momentum upside, right? We will see how which ones to avoid, which ones to take in the coming section. Hi everyone, welcome back. Now in this particular video, we are going to look at something called as shooting star. Now this is also a part of a reversal candle. This is a single candle. When occurs, the prices tends to reverse. Now when does this occur? When the prices are in an upward direction. So whenever the price is moving in an uptrend, there if you find such kind of a candle which looks something like this, there is a high chance that the price might come down or starts moving in a sideways direction. That is why we call this as a shooting star. Now I want to give you some story behind this particular candle. Why does this happen? Let's assume there is a person called as X, as we always talk about. He is selling certain product in the market. There is a lot of demand, right? So what does he do when there is a demand? He starts increasing his price, right? And he figures out as he is increasing his prices, people are still tending to buy his product. Now this is because there is a demand, right? When there is a demand, the prices tends to go up. Now let us assume that he has bought the price, say from X level to Y level, right? Now he has bought this price to Y level. At this level, a lot of investors or traders or buyers feel that there is no value to this above this level, right? Or beyond this particular thing. This value is not negligible from further from here. Now what does he do? He starts selling, right? And he starts selling at a discounted price. Now as he starts selling at a discounted price, that you will see that the price tends to fall down, right? And finally closes say around this level. Now as per our rule, the body and the closing, opening and closing, have to be through a body. And finally the high and low of the day has to be marked with the wick, right? Now if you see, this is a wick that we have marked, right? This is something like a shooting star. It looks like this level, right? This is the story behind a shooting star. Now what does it indicate? It indicates the trend of upward is likely to end, right? There is no buyers in the market, right? And most importantly, there is a change of trend in the current scenario or current market. Now we also have to ensure that it happens only in 2 times, right? Now first of all, this shooting star occurs when the price is in upward direction. All right, so the first rule is the price has to be in an upward direction. Rule number 1. Now rule number 2 states that the body of the candle has to be small real body, while the wick on the top side has to be minimum 2x the size of the body, right? Bigger the length of the wick, the better it is, right? Now 2 rules. 1, upward direction it has to form. Secondly, the wick has to be at least 2x the size of the body. I'm going to give you a pictorial representation as well, so let's go there. Now we are looking at a pictorial representation of the same. Now here if you see, the price has started moving in a upward direction, right? So let's assume this was 100, the price has moved to 200 rupees at this point, right? Later you find that there is a candle which has a wick which is at least 2x the size of your body, right? Which indicates there is a shooting star. Here, this point end, the end of this particular wick indicates that there are no buyers beyond this level at this point of time. That is why the prices have been brought down by the sellers, so that the buyers take it. But unfortunately there is no interest, and that is why you will see that the price keeps on going down as long as the buyers come back into the market, right? This is called as a shooting star. Now I'll also give you examples in 5 different time frames, so please have a look at the next video. See you on the other side. Thank you so much. All right. Similarly, like how we saw a hammer, a shooting star is exactly opposite. Forms when the prices are in an uptrend, and then there is a kind of a ulta opposite of a hammer that is formed, right? This is how it would look like. And then there is a high chance either the price would remain sideways or further fall downside. All right. So we are going to see some examples. We'll see a very few examples here in daily, and then we will go into other time frames as well. Right. Just before that, if you have seen the hammer I was talking about earlier, I found one which is there in front of me. Right. Look at this. The price was in a downfall. There is a hammer, and then the price tends to go upside. All right. Before that, now look at this. Price goes up, right, and then you will find that this particular candle, right, which is a shooting star. Again, there is a double shooting star here, right, followed by which the price tends to fall downside, right, and then it comes down. When there is a hammer again, the price tends to continue upside. So this is how the markets kind of moves, right? So we have seen in a shorter time frame. We are looking in a 1 day time frame. We'll also see in a shorter time frame. Look at this. Price goes up. There is a kind of a shooting star here, and the price tends to come downside. Right. Now we'll see a few more examples if we can. Here also, right, the price goes up, there is a shooting star here, right, and then the price tends to stay for side for a very long time, right? So this shooting stars can also act as resistance for a couple of times. All right, so we'll take in shorter time frame. We'll see in something like Bank Nifty. So we are looking in a 60 minutes time frame. So we are looking for a shorter time, right? Here it is. The price tends to go upside, right, followed by a shooting star, right? A shooting star was created here, and then finally the price tends to come downside, right? Now we'll see a few more if we can, if we find. No, we don't have here. All right, we'll see in 15 minutes if we can find some. Hopefully we should find. 1 second. Why is that we are not finding any? Okay, here there is one, right, small one, and then the price tends to come downside, right? So like this only the prices tends to go up and come downside as well, right? The shooting star will bring the price down, hammers will take the prices on a higher side, right? Here also there was, this looks like a shooting, it looks like a doji, but more or less you can also consider it as a shooting star, right? And then the price tends to fall down. It's not necessary. As a trader, you have to accept this fact that not necessary ki immediately you will find it, or this will act like this. There is a high chance probability whenever they occur, there is a chance that the prices will tend to further fall downside. Here I have a beautiful one. The price goes up, there is a shooting star and a huge fall down, right? So these are called as shooting stars, which brings the prices downside, right? We'll see one more or two examples in Nifty. We'll see if we can find one. No, Nifty. Try and search here. All right, I have a beautiful one right in front of me. Now look at this. The price was going upside, right? Tends to go up. Here, there is a beautiful shooting star followed by a massive fall down. Right? These are called as shooting stars. I hope these examples are clear. If you have any doubts, questions, please do let me know. I'll be more than happy to answer. You can also comment, and please do like, subscribe this channel and send it to your friends. Pura series will be there. An entire series will be coming up, covering everything about the candlesticks as we go ahead. This is just part 1 where we are talking about basic structures, basic things. We go ahead, we'll do it into a more whatever I use, whatever I know about it, I will be able to answer it or explain it to you. All right, so let's see you on the other side. Thank you so much.